Well, good morning, good morning, good morning. It looks like we're live. If you can hear me, type something in the chat. A little something, doesn't matter what. And if you don't type something, then that means you can't hear me. But it looks like everything is working okay, on my end at least. So if you are hearing me, good morning, welcome. Monday morning, beautiful. Hope you had a good weekend. I had definitely a very good weekend. It was nice weather. I went to a dock party. A friend of mine from my tennis club invited my wife and I to their cottage for a dog party. That was quite nice. Quite nice indeed. So today we're going to take a look at the latest set of CFTC data. I thought it'd be nice to get you guys all set up. I mean, for me, I can't trade the markets without knowing what's happening with the banks, what are they doing with their positions, and what is setting up, okay? I've already entered into a trade yesterday. We talked about this setup last week. If you've been following along, you would probably have a good idea of what trade that was. Um, Sometimes I don't make it easy here, okay? Because we have paying members that pay for the convenience of having the signals given directly to them, exactly where I got in, exactly my stop loss, my entry, my take profit, the trade ideas that I'm going to be watching for the week, and all that good stuff delivered on a platter. All right. I like to teach you guys. I want to inform you guys. I want to show you what it is that I'm doing and be as transparent as possible. But I don't want to give away every single trade that paying members are getting access to. But if you've been following us, if you've been following along with us, you'd know pretty much what the trade was. Um, Another thing is make sure you watch all our videos, our live sessions, the video analysis that I post on my social media channels. And if you like and support all of our material, we'll be looking through all the social media posts, looking to see who continually supports our channels. And then we'll choose one of you to win a scholarship with our school for next month. All right, we already picked one for this month, so we'll be looking for one for September. All right, now that I've gotten that out of the way, let's do something here. We're going to look at the latest set of data. As you can see, I have some data up here. This is a snapshot of the positions held by the institutions. And as you know, I always like to take a look at the change column, and that gives me a good idea of what took place over the last week. Okay, this is the change over the last week. And I look at the big numbers and I can see, bonds bullish over the last week. And I can see oil was somewhat weak, but the S&P 500 very weak in positioning, okay? Not weak so much as prices dropping, but in their positioning, very bearish, okay? And then we could dig down deeper and take a look at what caused that to be bearish. Was it profit taking on long positions? Was it an increase in short positions? We'll take a look at that. And then when you combine the positioning of the institutions with the institutional supply and demand analysis that we do, you can get a good idea most of the times of what they're in the middle of doing with price and what we should be expecting, okay? So that's the snapshot for you. Let's start by taking a look at gold. And what are we looking at here? Well, first thing I'm looking at here is long positions. Now we know that they were somewhat aggressive back here, February, March, April, okay? Up, and that's up and throughout this area. And you can see when they were aggressive with their positions, take a look at what happened with price, right? Price rallied up because when non-commercial add to longs, it causes price to rally, right? So we see again a slight increase in longs, but now we're decreasing. It's just profit taking on long positions, right? So all throughout here, these last few weeks, is profit taking. 311, 281. Yeah, they bumped it up one little bit here, probably to cause that little rally up, but then profit taking again from the highs. Okay. So we're seeing this theme of profit taking up here. And if it continues, and it probably will, we'll likely be seeing a drop in price. Okay, so that's what we're expecting. Now, I've talked about what we should be looking for on the daily time frame. Okay, I've posted charts of the daily time frame of gold on the social media channels. And if you've been following along and paying attention, you'll know exactly the exact daily demand zone that needs to be taken out before the momentum to the downside will really kick in. So look for that. And if you don't know where it is, come into our Telegram channel and just use the search function, type in gold, hit enter, and look through the posts, and you'll eventually see it. Okay. Shorts, when we look at short positions, we can see that they're cooled off, right? See the blue in the column? That means positions are cooled off. They're not really focusing on shorting right now. Profit taking on longs, yes. So that will help fuel the move to the downside. All right. Let's take a look at oil. So remember, well, if you weren't a member, you probably wouldn't know this, but members were told that price was rallying up into an institutional area of selling. We had a big emotional spike to the upside. But I said, watch, doesn't mean just because price is all the way up here that this supply area is going to be taken out. And look what happened. They brought price right back inside and they held supply. And now look at what is taking place, okay? They held the supply zone and now we're seeing the bearishness. And this is exactly what I laid out for members. Now, if you look at short positions, you can see that they've been increasing over the last few weeks. Interesting. Not really. With institutional supply in play, selling is to be expected. And so that's what we have. Increase in short positions. And look at the coloration of the cells. Went from neutral to a little bit bullish. That little bit bullishness was that big spike up in price. And then we get the bearishness that is kicking in right now. Now, my trading oil right now, I'm not trading oil right now. Okay, but this is just to show you how the market moves and the supply and demand dynamics and how non-commercial positions are always in line with the direction of price. All right, so now we got the US dollar. So when we look at the US dollar, the first thing you can see is that when we look at the long column, it's very blue, okay? That means the banks right now don't have an aggressive position in terms of a long position, okay? When we look at shorts, what do you see? You see that they were aggressive, somewhat aggressive, not majorly, but over the last few weeks, they've declined those positions, all right? And this is happening here at these lows, and it's happening at an area where we have some demand coming into play, all right? We can see those this area of demand coming into play on the monthly time frame, and also we have it here on the weekly time frame. So with this demand coming into play, look at the big push to the upside that we got here. Okay, see the big push to the upside? That's pretty aggressive, right? It's pretty aggressive. So that could be fueled by the profit taking on short positions. All right. If we look at the RSI, we can see RSI is somewhat weak under here, under the 40, right? It's creeping up to the 40 just now. So it's gaining momentum here. So we suspect that on the lower time frame, once the momentum really starts to shift, we are expecting a push to the upside. Now, for this to really kick in, we want to see long positions increase. We're not seeing that yet, but be patient. I believe that is coming. All right, the Aussie. We've been watching the Aussie for a very long time, and we've been seeing how short positions are what have been dictating price over a very long period of time. They add shorts, it drops. They take profits on shorts, it causes rallies. And we can see that in the coloration here. I made the dark clouds here. This is when they are adding to their shorts. Causes a move to the downside, as you can see. And when they're not adding to their shorts, look what happens. Price rallies. Okay. And again, adding to their shorts right now. As you can see, look, 145 is maximum. We're creeping up towards there. But as you can see, the point I'm making is the increase in shorts. Increase in shorts with institutional supply in play. So that tells me that over time, we are likely going to see a push to the downside. Okay, we still got room for them to add more, so we'll see what happens. It's been holding sideways for a very long time, so it's not the most ideal chart. We do have a trade idea on this one, but we need something very specific to happen, and I posted that for members. US CAD. So take a look at US CAD. When you look at the short column, what do you see? Very cooled off, okay? So you think they're thinking about shorting right now? No. Now, we have had some really good pressure to the downside, okay? But as you can see, it wasn't because of shorts being added, okay? It was the reduction of long positions, okay? You can see back here where they were aggressive, then they profit take, then they're aggressive, and then they profit take. And this is what's been fueling this move to the downside here. So recently, over the last few weeks, they're adding to their longs again, which is building the momentum for a move to the upside. Look at the RSI. We were under 40. Now we're above 40. Momentum is building. This is buying. And I suspect we're going to see a bigger push to the upside in time. US Swiss, same thing. We got the demand in play, just as we have been seeing across the board with US dollar led pairs. Demand is in play. Long positions, slight increase in them, nothing major, but once they really put the gear into motion, we can see a bigger push to the upside like that. All right, Euro US dollar. So this one is of interest to me. Okay, this one is of interest to me. Why? Well, first thing you should see when you look at the long column is just how red the cells are. Okay, we're at 246,000. We were at 248, then we dropped to 247, now 246. To me, this is signs of profit taking, and they have to profit take it at some point, because look at maximum size. Maximum size is 266,000. That's the largest long position they've ever held. We're at that. We're pretty much at that. Okay, yeah, they can add a little bit more, sure. But I think that there's a very good chance we're going to see a drop in price here, okay? When I did some historical analysis on price, and I looked at the last time that price was at these highs, I looked at how much of a drop price created, and it was quite significant, all right? So it's enough to capture quite a move. Now, we have this imbalance here, this weekly imbalance that is holding price for the time being, but it's not a high-quality institutional demand zone. So we suspect that this zone can be easily traded through without any significant pressure to the downside. And I think profit taking from long positions will be enough of a pressure to get price to the downside. So really liking this pair. Pound US dollar, we're bearish on this one as well. If we look at positioning, we can see it gives us a little bit of a different story here. This one's quite clear with short positions increasing, okay, causing pressure to the downside. Profit taking on long positions, reducing long positions, increasing shorts. It's pretty clear they're putting pressure to the downside. And the interesting thing is when you take a look at the coloration of the cells, which usually gives us the sentiment of the institutions, you can see that they were previously bullish, okay, bullish sentiment, and you can see why they were buying, right? So the coloration of the cells were green. Now you can see it starting to turn more red, okay? Going from green to blue and then red. The blue is neutral, red is bearish. And so this is what's beginning to show here up on the charts. All right, so there's room for a drop. Demand a little bit lower down, so we're watching for a move to the downside there. US dollar, Japanese yen, look at long positions, okay? You see what I'm seeing here? Look at this. Starting to become prominent here. They were very cooled off for a long time. Now they're becoming more prominent. And this is taking place as price is bottoming out here at institutional demand. Okay? So I suspect pressure to the upside will continue in the weeks to come. And Kiwi, not much going on here. You look at longs and shorts, very cooled off. Not much going on here in terms of their positioning. I suspect it's just going to move in the same direction as the Aussie. But I did want to go to the S&P because remember how we saw bearishness? All right, so when we take a look at positions, here's the bearishness. This is why. When you look at short positions, you can see them increasing, okay? Right? Look at the coloration of longs. They're cooled off right now. But shorts are what they are focusing on. Now, we were previously talking about this area on the weekly time frame. This would have been the perfect spot to get in long. Institutional demand right here. Price looked like it was going to start to head lower. It stopped, reversed, went higher. So now we're watching to see what it's going to do because it's like all-time highs right here. But we don't have big buying that is fueling this move to the upside. So what's fueling this move to the upside was short-term buying. And when we look at the time frame lower, on the daily time frame, you could see that short-term buying. Now, we're watching the daily time frame. We located the institutional buying zone that they use to propel price up here, and I'm going to be watching for the removal of that. You know, with the increase of short positions, it leads me to suspect that there's a very good chance that we could get a drop down here to this institutional buying zone, which would be lovely. If it got down here, I'd be looking to start accumulating long positions from this area without a doubt, okay? So I'm going to be watching that to watch for the short signal to indicate that the price is going to drop down to that area, and then we'll take it from there. We'll see if it gets down there, and if it does, wonderful. Okay, folks. Yeah, that's pretty much it. I hope you enjoyed this session today. I'm going to let you go. We got a class starting at 9 o'clock. It is a level 2 session where we're talking about institutional trends, price structure, how do we know when there's an upward trend, how do we take part in a trade when there's a trend in play, all that good stuff. And we're going to be doing it in half an hour with students, okay? You want to join? Come and join. If you want to just see what we're doing in class, come and join. We've got 1 week for free, all right? But you can only use it once. Don't do any sneaky business. We've already caught some of you sneaks trying to set up all other accounts, all right? We can find you, and then you'll be banned, all right? You'll be banned from the website, so don't try to be sneaky. Anyways, you take care. Have yourself a good one, and we'll talk to you soon. Take care, everybody.